YouTube, what's up? So, as the thumbnail says, I liquidated all of my gold after over 3 years of holding it and cashed out on all the profits. You might be wondering, what on earth possessed me to do that at this point in time where everything seems to be going up, 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 and away to the moon? Well, let's take a quick look over here and what's going on. And, this is a gold price in the past 3 years. And if you look at it, it's actually quite similar to what gold was doing back in the late 70s. Now, most people don't realize that gold had it's almost 1,000% move in about 4 years, where it was about 100 and pretty much hit about 1,000 at its very peak. And that's a 10x move that gold made in over 4 years. So, I mean, that's very Bitcoin-esque if you ask me. 10x move in just a handful of years is quite a vertical increase in price action. And that's basically what we've been doing in the past about 3 or 4 years. And the reason why I decided to cash out is, look, we went vertical, right? I rode this thing all the way up here, and so I locked in all of these gains. But what's happened recently is we've kind of hit some, let's say, resistance over here where we're just churning through. And if you look at what happened in the late 70s, we also had this very vertical move up, at which point we hit some resistance and churned through. And guess what happened? After we broke free of that resistance, that's when gold really skyrocketed back into 1980. And so the question you might be wondering is, well, we hit a similar churn area after a vertical rise, and we hit this churn area. So why wouldn't you think this would go up? And so here's the thing. That is the conventional wisdom. You hit a bull flag, markets kind of churn and digest the vertical move up, and once it's done churning, it's going to go straight up to the moon. And it can. It absolutely can, and I think it will. Look, I'm a long-term gold bull. I think we've entered a secular gold bull market. But the reason why I cashed out is this is more of an investing thing, is when you get to these junctures, right, where there's a consolidation point, it's not so clear what's going to happen. It could go up, but because of the consolidation, you're not guaranteed that it's going to go up. There could be some correction happening, and there are many other times when we've had corrections that goes down because of everything getting liquidated, including money-making assets such as gold, which we saw in 07, 08. That could happen again, right, if we have a big drawdown in the market. And so rather than just pretending that you know the future and that it's going to, for 100% sure, go up, it's good to sometimes just cash out and lock in the profits and then see what it does. Now, if gold decides to show me that it is on its way up and breaks new all-time highs, back tests, and go up, then I'm more than happy to go back in again and easily lose that little amount that, I didn't participate in on that little up move. But if it does go down, then I'm looking to get more gold and get back in at much cheaper prices. And so I'm just going to let gold tell me what it's going to do. And based on what it does, I'm going to benefit from it, right? And what that means is, look, if gold goes up, comes back down, back tests the previous high and goes back up, on that back test of the previous high, I'm a buyer. And sure, I lost a little bit over here, but to me, the risk wasn't worth it. I'm more than happy to lose this. I mean, I rode this up. I bought 3 years ago, so I rode all this up. I'm okay to lose just a little bit in order for it to confirm to me that it's going up. That's a small price for me to pay, right? If it does go down, then I can enter at a much lower price, maybe around, somewhere here in the last peak, and I would start loading up in so that I would regain this and ride it on the way up. And that is the plan, right? Like, you're not going to know the future. So what you do is, if you have a lot of gains, which I do, I mean, over 200+% returns in a few years, you lock that in, and that's a big portion of my entire life net asset worth going up almost 2x. You're happy with that, especially if you're not paying any tax on it here in Singapore. So that's why I cashed out, right? It's never get too greedy. Greed kills. If you're sitting on a lot of profits and there's a moment where there's uncertainty involved, then you just lock in the profit gains and let the market tell you what you don't get greedy. Don't think you know the future. This is how people get into trouble. Even if they made a lot of paper profits, they'll lose it all by becoming overconfident and thinking that they know the future. And I get it. It looks like it's going to go up. That is the conventional wisdom. But it's not enough for me, right? Conventional wisdom and what everybody else is thinking is not my strategy. My strategy is exactly what I described. And I will let the price of gold dictate to me what my next move is. Do I think it's going to skyrocket all the way up here for an incredible rise? I absolutely think that could very well happen in the next, 5 years or so. If you think about what's going on with the debt market, we're in serious trouble in the long haul. And I've explained to you in many of my old videos about why I do think gold is in a secular bull market. Now, let me explain to you why I think we're in a bull market again. I've shown this graph probably 2 times in other episodes, but this is a chart going all the way back to the Great Depression in the 1920s, right? And what it's showing you here is the stock market, the equity market, goes through these periods, right, of where it kind of just goes nowhere for an extended period of time of about a decade, right? We did that around here. There was a steep drop because of the Great Depression and this incredibly manic rise, right, that had an incredibly manic decline, which is usually what happens when you go vertical. And then it depreciated. And then we entered this other period, like in the 60s and 70s, where it kind of just like meandered nowhere for about a decade or so. And then it busted up. And then we entered this other period back in the dot-com boom and the 07-08 crisis, where we kind of again like meandered nowhere for a while. And then we broke out of that, and now it's that same amount of time again, right? The similar amount of time that has transpired where we're due for this other kind of meandering and going nowhere of over about a decade. And I think we're just entering that. And what happens during these decade or so of meandering nowhere is there's a capital rotation out of equities and into precious metals, right? So this is when gold and silver will double and double and double and go parabolic. That happened back here. That happened back here. That happened back here as well. And that is happening over here. And we're just in the early stages, right? And so the signal to look for is, do you see some kind of a parabolic rise in precious metals? Because if you do, that is a signal that we are entering that phase again, because of underlying fundamental factors, right? And this time it's sovereign debt, right? The issues with long-term debt that many developed nations, G7 OECD, are facing right now. And that's why we have high yields in the long end of the yield curve and precious metals just going up. Now, does that mean precious metals will go up in a straight line? No, absolutely not. And so while I don't trade gold, meaning I don't day trade gold every up and down move on a daily basis, I will take in and lock in profits from time to time in like every like 1-2 kind of yearish time frames where I think there's going to be quite a big, change in the price direction, right? And if I'm unsure, I'll cash out and let gold tell me what it's going to do. And we are at that moment, and that is the reason why I cash out. And that's the way, for me at least, I manage my portfolio and the risk, right? I cash out and lock in profits and gains when I see these periods, and then I'll get back in when I see confirmation. I don't try to front run and pretend to be a fortune teller, no matter how everybody thinks it's going to happen and no matter how enticing it looks. I don't do that, because that's actually over time a way to lose money, right? Even if you get a luck bounce here and there, over time you keep doing that, you're going to be a net loser. And that's exactly what you want to avoid. So moving along over here is, why do I think gold may correct? Well, one of the main reasons is what's going on with the dollar. Now, this is the DXY, which, a lot of it is to the euro, but it's still got an exposure to a bunch of other basket of currencies, and it's generally understood to be the strength of or weakness of the US dollar. And the DXY right now is showing mega negative divergence. And negative divergence meaning here's the price action. So it made a low and made a lower low, right? And back then, now this is a monthly chart, right? Or sorry, this is a daily chart. And while it made a low here when it made this low, on the RSI, it made a higher low even as price made a lower low. So lower low, but a higher low here. And so this is in technical analysis, one of the basic fundamental things they teach you is what you call a negative divergence, right? When the price action does a higher high or a lower low, where the RSI does the exact opposite. It does a lower high or higher low. And in this case, it's a higher low, even though price went to a lower low. So sloping upwards, sloping downwards, what happens in this negative divergence? It shoots the hell up, right? That is what the dollar did the last time we had such a big negative divergence. And lo and behold, right now, we are facing a huge negative divergence again, where we made a low over here, made a low over here, and then we recently made a much lower low. However, on the RSI, we made a much higher high, hence another upward sloping RSI line, whereas the price action was downward sloping. So again, a negative divergence happening here. And the dollar, lo and behold, has bounced from that and it's now starting a rise up. So if this were to play out and technical analysis on negative divergences on the daily timescale show, I would expect the dollar to also have a pretty important rise up. And if the dollar gets stronger, it is likely that that's going to impact the price of gold going up because they're usually inversely correlated, meaning if the dollar gets stronger, gold usually gets weaker. And so if I'm anticipating the dollar, which almost nobody believes is going to get stronger, everybody thinks it's going to go down, actually rises, and we have a huge short covering situation because everybody's going to caught off guard and on the wrong side of the fence, that means dollar is going to like just skyrocket and a huge, wave against gold will be coming, right? And it will be difficult, in my opinion, for gold to really appreciate when the dollar's exploding higher. They usually don't explode high together, right? And if the dollar goes up, likely gold's going to struggle to go up at the same time. And so why would the dollar go up and, correspondingly, why would stocks go down? Well, we got to talk about Trump here. We got to talk about Trump. So stocks edge down because more Trump tariff, and what's going on here is this is the problem for Trump. So this Trump taco thing has kind of run its course. You can't have the president of the United States be a taco man where nobody believes him. Now, the one thing he did do recently was he did bomb Iran with the B-2 Spirit bombers on the nuclear facilities and took out those three, and particularly the one in the mountain, which he dropped a huge amount of GBU-57 bombs over there, right? Bunker busters. And that was him not chickening out. But outside of that, in the financial and global market, especially with regards to these tariffs, he's kind of chickened out every time. And, the strategy that he has, the art of the deal where you come out really strong and just break everything in the room to just go and ask for crazy things and then, ask high, and buy a low type of thing, right? That works the first time around, but it doesn't work if everybody in the room already knows that you're basically, just a taco man and you don't really mean what you first come out and say. And so the art of the deal can only work once, right? If you have a reputation of not sticking to your threat, nobody's going to believe you. And the whole strategy of the art of the deal just goes, down the drain. Like it can't get executed. So now a lot of the countries, Japan, if you look what they're doing, they're not yielding, right? And a lot of other countries also are like, hey, this guy's going to chicken out. Nobody believes Trump anymore. Not even the stock markets, right? He comes out with all these Trump news and the stock market it barely flinches because it's like he's going to undo it. He's not going to, it's just an empty threat. And so nobody believes him anymore. And that's a problem. You can't have the president of the United States function if nobody believes him, not even the stock market, not even his own cabinet probably, right? So he needs to, at this point, actually execute, right? He has no choice. Right, and that's what I believe. He has no choice now but to execute, make an example out of some nation or something, and that is going to cost him maybe about 1,000 S&P 500 points, which is fine for him because he's pumped it up with all his pumping rhetoric to all-time highs now. And so even if it goes down 1,000 points, that's still not bad, right? We're still not too far away from highs because we've pumped up so much. And so he's bought, if you want to call it, capital to go berserk, right? Go crazy Trump. He's bought the capital by pumping the stock market up, that even if it falls quite a bit, it's still okay. It's not a complete crash into never land. It's just 1,500 points, not terrible from the current 6,300-ish all-time highs. And that's what he's basically done, and the capital he's earned. So I don't think he's going to chicken out, especially on this August 3 extended deadline. There's going to be some reckoning, and that's going to catch, I think, a lot of people off guard who think he's just going to taco out forever, which obviously cannot be the case, because you can't make any trade deals, and no one's going to believe and trust in you or respect you if you're always known as a taco man, and then nothing will get done. So obviously this is not sustainable. He's going to have to do something, and I think a lot of people, including the markets, are going to get caught off guard. And now, what is going on with the markets? Well, they're just going nuts, right? If you look at the amount of leverage, right? Now, this is the amount of leverage people are using, ETF funds, on margin to buy individual stock traders. We are at an absurd amount. People are going all in and like buying leverage to get long on the stock market, which is, when this thing unravels, this thing is going to, this is like putting on, fuel on a flame, right? This is like a nitrous oxide in a car. This is just, if it turns, it's just going to explode even higher and crash even faster, right? And so just be wary, right? We are in some rarefied territory, nowhere close, right? 2000 bubble, only this much. Real estate bubble, only this much. We are in this, you want to call it AI bubble, but it's really everything bubble. We are in a way leveraged situation, right? This is going to unravel horrendously when it turns the other way. And trust me, it will. The other thing to keep in mind is, one company, NVIDIA, is larger than the entire nation of Germany's market cap for 4 trillion. It was everyone like, woohoo, 4 trillion, we're to the moon, NVIDIA. But if we really sit back and think about it, Germany is not some Zimbabwe country, right? Germany is like EU's top, along with France, top countries of the EU itself, right? And it's got a larger market cap than the entire country of Germany's output. Think about that. A single company. I know it's AI and all this, but just think about what that means in terms of its valuation. And think about that in terms of when Jensen Huang said the Chinese, in terms of hardware chips, are about a year and a half away from NVIDIA's latest. That means they're going to achieve parity in about a year and a half. And even though America is making Western countries, banning them from buying Huawei, AI chips, the rest of the world's not going to follow. They're going to buy Huawei chips, and they have an open architecture, opening licensing agreements. It's the opposite of the Western way of closed AI software and locked in like hardware. In China, it's open licensing and open source software, right? And that's why they're growing. That model will eventually eclipse, because it's just free and everybody can use it and develop on it. And once Huawei achieves parity, you can bet that it's going to be cheaper, and that other countries are just going to buy it, right? Why would they buy the more expensive thing that does the same amount of processing? You buy the cheaper one. And so what does that mean for, number one, NVIDIA's valuation, and then what does that mean for Huawei's valuation, if you think about it, right? Because an investor, there's no ban on investing in Huawei, right? Even if you can't buy Huawei chips, if you're in America, you can invest in Huawei if you want. There's no ban on that, and they won't ban something like that. That's crazy. You can't ban where people want to invest in the world. So the money's going to flow in growth and development areas. So keep that in mind when you see crazy valuations like this. Could it go up more? Sure, but that just means it's setting itself up for an even greater fall in terms of realignment to the norm and to the mean. So if I zoom into the stock market, like what's actually going on, this is on the hourly scale, right? I think we've entered yet another WOFF distribution event. So this is a WOFF distribution, right? This is how you have a distribution where you sell to the retail and then it crashes afterwards. And you have this initial thrust, which we had over here. And then what you have is the UT, or upward thrust, where a very marginal high is made over the initial high of a run up. And we did run up here, right? So a very marginal high is made, and we did eke out last week a very marginal high, right, compared to the previous high, which is what we call the upward thrust over here. and then we came down and now we're meandering over here, right? And so it could be that we just now like kind of meander a little bit more near the previous high, no major moves as we enter the LPSY phase, which is the last point of supply. And, then we start going down, right? And so we could do this, right? We could go to the previous all-time high even and just meander around here just like we do here before we finally break down. And the key is we break down the low over here, right? This low is broken before the big move comes down. So we could be meandering around here and then break this low that extends over here and then make the big move down. So that's exactly what I'm watching for. It could happen sooner, right? It doesn't necessarily have to be a 1-1 map. Like this could be the end of the LPSY, last point of supply, and we just go down from here. The key being we take out this horizontal support line over here, right? So that's really what to watch, is this line over here, right? If this gets taken out, and when we take it out, we have a little bit of this, and then we go down, that will tell you that we have completed a WOFF distribution, which means or portends that a big downdraft is coming and not too long from now. The other thing I want to mention is this is not a good weekend. So on Friday, Voodoo Man, who is the inverse of everything, right? Kramer says, oh, we're closing out the week, a closing bell, woohoo! That is not a good sign. That is likely meaning that on Monday we're going to gap down. We're going to open with a gap lower down. Mark my words, never underestimate the voodoo power of Jim Cramer, the inverse Kramer effect. Everything he says the opposite happens times 10. So if he ended the week saying this, my supposition here is Monday going to start with a gap down because inverse Kramer. Never bet against inverse Kramer. Never bet against Elon Musk. Never bet against inverse Kramer. You're going to lose money that way. So on the fundamental side, I do want to bring up something that has been growing steadily and gaining steam, and why I think we're going to be heading into a recession, no matter what people say. And that is the consumer, right? And if you look, this one chart tells you everything you need to know. The consumer is starting to get strangled, right? So let's start with credit card. Credit card, now this is 90 plus days delinquent. So you're 90 days late on the loan, right? And the loan type that has gone up the most is credit card. Huge increase. Last time with this huge increase, right, was 0708. We have this huge increase now. This is not good, right? People are 90 plus days late, 12.31% on their credit cards. Now, credit cards are the first thing that goes among all the different types of loans you might be in debt that you owe, because, it's all right to be late on your credit card. And so I'm not surprised that it's not a good sign that credit card shooting up, but what's not good is the other one. So usually the second one to go up is your auto loan, right? So if you're leasing a car or something, or paying your car down that you bought, you don't want to lose your car. So you'd rather be late on your credit card payment than your car payment, right? And so car payments are usually second. And car payments are starting to creep up as well, right? They're 4.99%. The last thing that usually, right, starts to go up is your mortgage payments, right? People will cling on to your mortgage as much as that's the last thing you want to be late on. So that's the last laggard in terms of lagging indicators of that we're going to be hitting a consumer that is strapped, causing a reduction in consumption and the start of a recession, because 80% of the GDP is consumption, right, by consumers in America. And you'll see that mortgage is starting to creep up, right? It's starting to creep up. Now, all three are starting to creep up. This is not a good sign. Remember, GDP for Q1 was revised lower, the actual, not the estimate. The estimate came out negative 0.2. The actual was revised lower to negative 0.5. And the reason why it was revised lower was not because of all the tariff stuff and all that, which everybody says is transitory, but it was because the drop in consumer discretionary spending was a lot worse in actual measured numbers than the original estimate. And so that's another signal that the consumer is strapped. And we hear other anecdotal stuff about the Amazon Prime Day being 40% lower and all that, although this year it's 4 days, not 2 days, and they made it 4 days because they think the consumer is kind of struggling, so we wanted to give it 2 more extra days instead of just 2 days like they did last year, so on and so forth. But, watching this, there's a clear signal that the consumer is strapped, and that is a very ominous sign. You can see in discretionary spending, as I just mentioned, this is not good, right? Especially in travel and tourism. It's just going to, this is the first to go down, right? Travel and tourism. The less money you have, the less you're going to splurge on traveling around. That's what we're seeing here, right? And it's not like just going up. This thing is like meandering down here. So this is what I meant, right? consumer discretionary is not looking good on top of the debt that is owed. The other interesting ratio to look here is the discretionary versus staples. So the percent of discretionary spending versus staples, meaning the inelastic stuff you need to, like food, gasoline, like that kind of stuff. The ratio, when it gets this high, signals bad things, right? The last time it was this high, right, it was a tech bubble. And we've had a kind of like, in 2020, we had that crash. And here we are again, and it's gone down. So this is, again, not a good look, right, from a consumer spending point of view, which is a huge component of overall market growth. And the thing is, it's not just America. If you look at this is Canada. And if you look at Toronto, now remember, as I said, mortgage is the last thing that gets shafted, right? But in Toronto, mortgage has gone up, right? Tripled, highest in over 10 years. Now, it went from 0.5 to, so these are nominally small numbers, just playing spades here. But the fact that it is in 10 years, we haven't seen this type of a move, and that it has risen so quickly is something of a concern. And that's not in the United States. And as we all know, Canada has a serious issue with its real estate, particularly in like places like Vancouver and also in Toronto. People just, they're falling behind because they can't afford to pay their monthly payments anymore. And again, it's also not just residential. If you look at CMBS, where the commercial mortgage-backed securities, the commercial real estate market is also choking at the same time. So we're not just talking residential, we're talking about office space, malls, and all that. They're choking, right? Like, these are really high delinquency rates for commercial real estate. This is not a good sign. So we have multiple signals pointing to us and getting the... Okay, so I got to mention this, right? The head of the U.S. Federal Housing, Department, which is this guy Polton, he this is just weird, right? He's like basically cheering that Jerome Powell, the rumors of Jerome Powell resigning are floating around, and he's like pumping that rumor up. I mean, that's really just weird, right? Like, one U.S. quasi department shouldn't be pumping the rumor that the other quasi department's heads are thinking about resigning. I mean, I get that he wants lower rates, right? Because high rates is kind of, in his head, screwing up with the mortgage rates, which is screwing up U.S. federal housing and giving him a hard time. But this is just a strange thing. So this came out on Friday. There are a lot of rumors swirling around that Jerome Powell's going to quit. He might quit, right? He might quit. But, I don't trade based on headline news, because you have no control of that, and it's a crapshoot. Might as well just go to the casino if you're going to invest on headline news. That's, that you can't, right? If you're in it, when it happens, you're lucky. But if you're not in it, I mean, it's not like you could strategize around it, right? You just don't know what's in people's head and what they're going to say at any moment in time. This is our closed door stuff, right? So there's no way to know ahead of time, and you don't, basically invest based on headline news. The last thing I'll leave you with is you got to be careful when it comes to ChatGPT, because, this happened on the Discord server, but basically, on ChatGPT, they were saying that, this snapshot was put in, and ChatGPT saying, hey, this guy is not a real executive, that he was a private businessman, not affiliated to FHA, and he's no official holder. Yet, if you go to the official website, there he is, right? I mean, there he is. And so, this is an example of ChatGPT or any kind of AI. It could just give you the wrong information. And so you need to do your due diligence. You can't just rely on what any of these AI platforms or foundational models tell you. They could be completely wrong, as is in this case. And so the bottom line here, guys, is that, as far as the message, when you're investing, you don't want to play fortune teller, and there will be moments where it's good to lock in gains, especially if you're sitting on a lot of paper profits. Actualize it and turn it into real profits when you're at a moment where the market has to make a decision on where it's going to go. And no matter how much it seems like it's going to go one way versus another way, and that everybody thinks it's going to go if everybody thinks it's going to go one way, that's also something you should be very careful about. As Warren Buffett said, be very scared when everybody's optimistic, and be optimistic when everybody's scared. Well, the environment right now reminds me of when we had the bottom a couple of months ago when everybody thought we were going to crash and have Black Monday and S&P going to just crash another 10,000 points and we're all going to go into the Great Depression. Remember? And that was exactly near the bottom where it just skyrocketed after that. And I feel like we're just in that kind of a situation now, just the reverse of it, where now everybody literally thinks we're going to go up, and like there's absolutely nobody can find a reason why it would go down, which was exactly what was happening at the bottom. Nobody could find a reason why we would go up, right? It just seemed like the end of the world type of situation. And the reverse is going on now, and everybody's lying long, and there's no market chart or anything in fundamentals that would think that you would go down, and everybody's long. Everything's going up also at the same time. And so that is a consensus. And I just get very, very, careful when that happens, because that is exactly when things kind of just flip on the dime and everybody else gets caught off guard. And, I just don't want to be in that position. So, like I said, it's okay to lose a few percentage points here. And what you get out of that is you get confirmation from the market on the actual direction it's going to continue going, or maybe change. And that's a small price to pay, especially if you're sitting on a lot of unrealized profits that you haven't locked in yet. Go ahead and lock it and let the market tell you what you're going to do. So having said that, let's see what it brings the next week. If we do get the completion of the WOFF distribution, I would expect the market to finally correct downwards pretty significantly. So let's see if that happens. Everybody have a good weekend and a safe week next week. Till next episode, peace out.